Hey, good morning. Let's go over today's trade plan. So the primary catalyst this morning was the non-farm payroll report, and so far we've seen a very strong failure off of that 1928 resistance, which essentially marks the top of the short-term range or the short-term balance. And at this point, heading into the open, we know that the sell side is in control, and there is possibility for ES to go even lower. Typically, when a market completely fails and rejects at the top of balance, you'll see it coming back down into the high volume node of that balance area, and a lot of times even test the bottom of that balance area. So in this case, that is actually closer to the 73.75 to 75.75 zone. So if the sell-off really continues and we continue to see downside momentum off the open, then 73.75 to 75.75 is a possibility today. And of course, in the event of extreme selling, we could go even a little bit lower, but those areas are within range at this point. Now, nothing goes straight up or straight down, so there is going to be this ebb and flow that takes place, right? So that means that we can still get these short-term bounces off of support, and it's important to be aware of that because as a day trader, it's okay to have that bigger picture idea, but when you are executing that idea in the market, you still need to set a relatively modest stop, right? Somewhere in the area of 2.5 to maybe 3.5 points, so that you still have decent reward to risk on that trade. So that means that's your margin of error, right? So the market can go about 3 points against you, and as long as the idea is valid and you're in from a decent spot, it can still work out. But if you have a bigger picture idea, but it's executed in a way or at a price where the market can bounce 5 or 8 points before it goes lower, then you'll be stopped out before the idea actually plays out. So it's important to be aware of these larger time frame ideas so that we can position ourselves accordingly, but at the same time you have to execute it on your time frame. You have to execute it as a day trade, if that is your primary strategy, which is what we employ. So at this point, heading into the open, we know that the market is going to be opening quite stretched. It has already sold off quite a bit, so there can be a short-term bounce either off of the 90 quarter to 92 quarter or off of the 85 half to 87 half zone. And from there, we're going to have to gauge just how weak the market really is. The Russell has been relatively weak compared to the S&P and NASDAQ this entire time. And even this morning, there was a pretty decent negative divergence between the Russell and the S&P. So ideally, you want to see the Russell selling off a bit more to confirm that ES has a possibility of going down into 85 half, 87 half, and potentially 73.75 to 75.75. Now, if Russell finds support and kind of starts balancing, then you can see something similar happening in the S&P, right? Because this is just a big range and a big balance area, and you can have these back and forth movements within that balance. But what we do know is that the sell side is in control. So for that reason, we are going to be more careful on the long side and keep our focus primarily on shorting bounces, right? So when the market gets oversold, typically it'll put in a bounce, and that'll be the execution. That'll be the trade idea. And even if the first one doesn't work, we can still take the next one, right? So right now we have the prior VPOC at 07 half. That's an area of resistance. 12 to 14 is pretty decent, and then finally 21 half to 23 half is very solid. But if this market is truly weak, we should not go all the way back up to 21 half to 23 half. We should continue balancing near the lower part of the range, and then put in another extension lower into 85 half to 87 half, and possibly 73.75 to 75.75. Also keep an eye on the relative volume. In order to get that wide of a range, we are going to have to see consistent high volume in the market. And if the volume starts drawing up, then that'll be another indication that the downside may be done, and perhaps we can just balance now. But given the strong sell-off on the non-farm report, we should still see edge on shorting bounces. So we'll be a little bit more active on that side, be a little bit more conservative, and time the trade better if we are going to trade on the long side. and that's really going to be the primary theme for the day. So those are our main ideas. Let's see if the sell side can maintain control off the open, and we'll take it from there.